Good morning. Good morning. Let's see if I can do this a little bit better. Happy 4th of July. Uh, sorry about that intro, but I felt I wanted to have a little bit of fun with that. There's a lot to talk about today. What's going on, where we're going, how the market's reacting. Should you buy now if you're in the market to buy? Lots and lots to talk about. Where's my little cheat sheet? I have a couple commercials real quick. Well, not really commercials, but just in case. If you see something like this, you're a homeowner, sorry, right here, right? You see this little yellow card fold out thing? It's the county saying if your home value goes down, if you believe your home value goes down, you're allowed to request a temporary assessment reduction. We did this back in 2008. It's a very simple process. And the first step you do, so let me qualify that. I bought this house back in 2006 for $600 and whatever. And then it went up to $900,000 and my assessment went up a little bit. And then it went back down below 600, like 600. And so I went to the county. I said, here's my proof that my value is less than what I bought it for. If you bought a house today or in the last couple of years, right, chances are your values are going to go down a little bit. Even if it's 5% chance that your values go down a little bit, your values are going to go down a little bit. You have the right and ability to ask the county to lower your assessment temporarily. That's what this thing is saying. The first step you do is you get a form. Or actually, the first thing you want to do is call me or email me, say, hey, I think my values are lower than what I bought it for. Let's say you bought a house for 1.6, and in the coming months, we happen to go into a recession and then values plummet, and now it's worth 1.5 or 1.4. The county's there to help you with this rule. It's actually a law that we voted in. All counties do it. So I have to do something called a BPO, or broker price opinion, or a little mini appraisal, deliver that appraisal to you, and then you fill out a form, right? And I can give you the link to the form, etc. So just keep that in mind. That's what this thing's about. If you're a homeowner and you see this, keep this in the pocket or in your file, in your file, in case the values go down. All right. Second thing, if you're a real estate agent and you represent buyers, the county or the it's customary for the seller to pay for a 1-year warranty, a home warranty for the buyer. Okay. So what I've been seeing on all my listings is the buyer's agents just put like $700, and you're kind of wasting, one, the value of what the warranty is, but you're overcharging the seller for what it is. Your home warranty should be about $500. Just as an aside, right? Know what you're asking for. Ask your rep to send you one of these and get a valuation of what that is. Actually read it, actually understand what you're going for, because $750 for a home warranty for a year is a lot of money. And a lot of the stuff here isn't necessary in a lot of the homes that we're selling. So just look into it. Okay. So that's like a little pitch. Okay, let's get into what's going on. I wanted to say that I know I had Scott's head on the thumbnail. Scott's usually here, but his kids want to hang out with him today. It's happy, 4th of July. Happy 4th of July. Happy birthday, America. My Canadian birthday was 3 days ago. So happy Canadian Day, or Canada Day a couple days ago. But today, 4th of July, we're going to keep this short and sweet. Scott is not here. He's hanging out with his kids. My kids are teenagers. They're all asleep. They don't want to be around me right now because I'm loud, boisterous. I've been up since 5, went to the gym, drank my coffee. I'm ready to go. All right, let's talk about what's on the docket today. I'm going to go right here. Boom. Rate talk. The rates are going down a little bit. I say a little bit because it's like a quarter point. They went up 0.75%. And it actually did stall the economy a little bit. It stalled the market for sure. The real estate market stalled a lot. And I know what you're hearing on the national news, the propaganda news. I don't care what side of the aisle you vote on. It's all propaganda. They're all telling you that the economy is great and everything's doing great. And we're headed into a recession, no matter how you look at it. I don't know how bad it's going to be. If you look at, Peter Schiff, he's like Chicken Little, the sky's falling. If you listen to other people, they're saying everything's great. So you really have to make your decision, right? This week or next week, the feds are going to testify again. And the presumption is that we're going to ask for another rate increase, which is going to be probably another 0.5 point or another 0.75%, right? Right now, last week it was 6.578, and you could buy that down with a couple points. You can buy it down. I saw rates all the way down to 5.11 after you bought it down in 30-year and the larger loan and all this stuff. So when you get quoted a rate, make sure you know what you're talking about and you know what everything is, right? You have to have perfect credit. You have to have reserves. You have to have job, you have to have all these different things. So the going rate right now was 2 weeks ago is 6 5/8. It went down today. It's about 6 1/2, 16th. That's what I saw quoted. I don't know exactly where it is, but it did go down. It went down a little bit. So that's great. And I can tell you that's great because this weekend I had open house on Ellerbrook. And Saturday, we had 14 sets of people come through. The last 5 weeks I was doing open houses, we had, I think, max 7 people on a weekend, right? And it just kind of trickled down from there. Then a lot of those were looky-loo neighbors, right? When I count and I report back to my seller, I tell you I have 5 buyers and 2 neighbors. So you know how many people are coming through. That way you can have a good assessment of what's good and what's not. We had 14 buyers. We had 6 or 7 sets of neighbors come through, which is good for me. That's because I get to shake hands and hang out with and get to know them a little bit more. But 14 came through on Saturday. 7 sets came through on Sunday. So it was a very successful, I think, open house weekend for me. And the question was, should we do it on a holiday weekend? Well, heck yeah, absolutely, yeah. We should absolutely do it. So next time we do 4th of July weekend coming up, I'm going to do another open house. So there you go. Okay. Traffic. Oh yeah, and then the house we did in Sunnyvale, we did get an offer after 5 weeks. It's not exactly what we want, but we're going to work on it a little bit and kind of bump it up and see where we can land. I am representing a few buyers right now, and we're trying to lower the rates, lower the price. I'll tell you right now, sellers are kind of sticking to their guns, and what's going to happen is they're taking a chance that the economy gets better and the rates go down and that the market gets flooded again with buyers. When your house is on market for a really long time and you don't have a lot of traffic and a lot of offers, you have to work with what you get, right? The sellers don't determine the price of the house. The buyers determine the price of the house. And with both of my buyers, we came in a little bit lower and negotiated it up, and we got stalled. One guy Last minute, they threw in this, oh, by the way, we want a free month of rent. We never agreed to that ever. And that was another $4,500 out of a concession that they were demanding my buyers agree to. So we stalled on that one. And then another one, we came in pretty low, but we looked at values and we knew that the house was nice, but we also looked at the comps and we came in at market. Actually, it was $50,000 above where market was. And the buyer and the seller said, no, thank you. My house is worth X. If I can't get X, I'm going to rent it. And this is a beautiful house, beautifully done, right? And typically you don't want to put renters into a really nice house. You could get really great renters, but the chances are, you're taking a big risk there. Anyway, so that's it. Recession. Are we going into a recession? Again, Pollyanna says everything's hunky-dory. Chicken Little, Peter Schiff, it will tell you all day long that we're headed for a recession. The Fed, I'm not sure who does it, but they're reporting next week, 21st, the 12th, July 12th, as to where we are as far as growth and the economy and everything. And it's expected that we're going to be down. And we were down last quarter. And when you have two down quarters, it's considered a recession. Is it going to be bad? I don't know. Is the stock market bad right now? Is unemployment hedging? Are you an employee at a big tech firm and hearing rumors? So you can only make that assessment, right? We don't know until we're actually in it. We know we're in a little bit of quagmire right now, and that's why the Feds are bouncing the rates back and forth, trying to figure stuff out. So you're going to see a flood of homes come on market that were former Airbnbs. There's a lot of stuff that's happening right now in the Airbnb world. They're tightening up their market. They're charging their clients, which are the homeowners, more to rent their products, their houses and places through their service, and they're making it much more difficult, and they're making the return policy a lot more flexible for the users, the clients, the buyers. So you're going to, and what's happened is if you've watched, or if you've been on TikTok or been on Facebook, you hear all these gurus talking about how Airbnb arbitrage is going to do great and you're still going to make money and you can still make a ton of money off of this. Chances are you're going to have to get out of that market. And what's happened is everybody felt like, oh, Airbnb is the way to go. Short-term rentals, you don't have to deal with long-term renters, have all this other stuff, all these other reasons why you want to use Airbnb or VRBO or whatever, but that's the coin, that's the trend right now. Every major market is oversupplied in Airbnb homes by 30-40%. So I heard something somewhere, and I can't tell you if this is truth or not, but a typical market like Phoenix should have like 3,000 Airbnb units available. Right now it's like 68. That's the big number, right? So if you be conservative, you're looking at 35%, maybe 40. So you have oversupply, which dwindles value, dwindles rate, right? Because supply is going to remain constant. No, very many people are going to go on vacation, especially to Phoenix. But anyway, so you assume that supply remains constant. Demand remains constant and supply is overburdened. Well, your pricing is going to go down, which means if you overpriced or you overpaid for that property, you're going to be negative. You're going to be negative cash flow on that property. So you're going to bounce out of that. You're going to try to sell it, which if you look at the market, see this thing right here, the little thing right here, what happens next? That's Wednesday. We have a 40-day days on market report coming in, and you're going to see the numbers jumping. And that's what's happening now. So that's Airbnb. Is this a good time to buy? That was my thumbnail, right? I think I'm going to get to that in a little bit. Okay. Here's what you've been looking at here are the numbers that we're working with. And these are very, 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 very rough numbers. This is not a quote. I don't quote rates because I'm not a lender. Scott's here. He can kind of give you more information if he was here. But if you're buying $1 million home and your payment is 6%, you're paying about $6,000 PITI. That's principal, interest, tax, and insurance. That's your whole monthly nut that you're paying. If you're paying interest only, you're $5,275. That's pretty good. And the question here is, should you go down in sales price or buy the loan down or buy the rates down? And if you're at 6% and you lower the rate to $980,000, that's only $20,000 difference. You're saving a little bit of money, like not a whole lot of money. $121 difference, right? That's at the fully amortized rate. If you keep it at $1 million, and this is just an example, and you buy your rate down to $5,880, you're saving $191. So you're saving a whole lot more money. Now, that's just one example, and you can lower the rate a whole lot more, and rates are going to come down a little bit more too. So just be tight with it. My argument here is rates are great. I mean, sales price is great, but you only pay the price at one time, but you're stuck with the payment. So your best bet is to lower the payment the best way you can. And when rates go down again, if they ever go down below 5 or 4.5, then you refinance, right? And then you have an even better rate. So there you go. And the idea also is, if you have that mentality, you can also use the interest only. That's IO, interest only. And then you're paying $5,000 instead of $5,800, and you're saving a whole lot more. So don't worry about the price so much. Yes, worry about the price, but look at the rate. And you can buy down. You can, at this point, if you, instead of asking for a lower sales price, you can ask the seller to credit you $20,000 towards point buy down or rate buy down. And there you go. It's the same thing. The seller gets to walk away saying, I sold it for $1 million. I didn't have to go down at all. And his ego in mind, right? And at the end of the day, everybody wins. And this is a tactic that we've been using recently. And it's working for most people. Sellers, you understand that the number one reason why homes don't sell is not because of your agent. It's not because of the market. It's because of you. It's the ego. You think in your head you have to have this number. And if you do, that's going to hold your house on market a whole lot longer. I see houses all around my area, Sunnyvale, everywhere, Mountain View, everything's kind of stalling a little bit because their head is, this is the time I'm going to sell it. I think my house is worth X. It's really worth X minus, 0.8%. So just think, the market's retracting a little bit, just a little bit. Now is the time to sell, because next week, after the rates go up another 0.75%, not saying that it's going to be 0.75 because I can't tell the future, but if it goes up that much, it's going to stall the market even that much more. And there's going to be a lot less buyers in the market because it's going to make it a lot less affordable. So there you go. Yeah. So let's talk about, I'm going to keep it quick. This is a good time to buy. It's always a good time to buy. Is this the market? Are we on a cliff? I don't know if we're on a cliff or not. I personally think that we're getting close to a cliff. How much is it going to go down? I have no idea. Here in the Silicon Valley, I don't think it's going to go down horrendously, but we just don't know. It could go down a little bit. But like in places like Modesto, Stockton, Fresno, Las Vegas for sure, we're going to see home values go down quite a bit if this continues. And I've said this week after week after week. We're going to see the rates continue to go up. Unemployment's going to go up. The stock market's going to go down. Demand is going to wane. And Economics 101, if you have less demand and oversupply, prices go down. So there you go. I don't think when we saw the market go down in 2008, we saw it kind of go down here. In Palo Alto, it actually went up because people over there have money. They don't worry about money like, working blue collar people do. Here we're affected by the economy a little bit more. There it's not so much. If you're, in Salinas, you're a working class person, right? You're not, there's rich people there too, but if you're affected by the economy, you're going to see your home values go down for the most part. All right. Not that that's doom and gloom. This is the time to be prepared, right? For the last 5 years, we've been hearing experts tell you to buy stocks, buy Bitcoin, buy gold, buy this, buy everything. And now everybody's turning around and saying, have cash, be ready for cash. Even though inflation's going up, the dollar is becoming worth less, have cash in your pocket, be ready to buy on anything. And we're talking about any kind of asset class, vehicles, gold, housing, anything that's out there. It's going to be there. If you're prepared, this is where you can make a huge difference in your life in the coming years. If you want to talk about it, you want to go have a cup of coffee or beer or apple cider, give me a call. I'm happy to talk about it. I think that's it. I crunched it down to as quickly as possible because I know you want to go out and start playing and enjoying your barbecues and enjoy the fireworks. If you do see me, I'm going to be up on the hill in La Colina to watch all the fireworks here. The La Colina Park, 25.5 acre park in San Jose. Second biggest park, I think, in San Jose. We have a hill, and typically there's 100, 150 people there every 4th of July to watch the fireworks. And I'm going to bring my drone. I'm going to fly and see if that actually works. What do I know? I've only been doing this for a couple months, but I'm going to have my drone out. But the hill there is amazing because you can see almost 180 degrees of fireworks everywhere. You can see the sponsored licensed fireworks as well as the neighborhood fireworks. All right. Have a great week. Make it a great 4th of July, and we'll see you out there.